Is America due for another financial crisis? And if so, how bad would it be this time? Good evening, viewers. I'm Sabah, and thanks for watching my special report of Money Matters. As a European debt crisis unfolds, a new trend is developing in our financial markets, and what I'm about to tell you is alarming. It appears that the international trade is shifting away from the US dollar, threatening its status as the world reserve currency. I'll explain how and what this means for our future. Ever since World War II, the US dollar played a major role in global trade, especially in the oil markets. In the mid-70s, Saudi Arabia and other OPEC members agreed to only accept US dollars as payment for oil, and then to invest some profits back into US banks and treasury bonds. This increase in dollar demand greatly benefited our economy over the years, as well as strengthened the greenback's reserve status. Some benefits of having this global status include cheaper imports, low interest rates, unlimited money printing and government borrowing, and the security of the US dollar as a safe haven. Okay, so this is where things get serious. According to the Wall Street Journal, the US dollar accounts for over 60% of the global exchange holdings and 80% of all foreign exchange transactions. But that is changing as major countries around the world step away from the dollar. And here's some evidence of that. First, China and Japan struck a deal 6 months ago to drop the dollar and to use their currencies for bilateral trading. Next, the so-called BRIC nations plan to move away from the dollar to trade with each other. Of those, Russia and China already agreed to that 2 years ago. Well, India held a BRIC summit back in March on this issue. Take a look.
The leaders from the 5 leading emerging economies in the world, Brazil, Russia, India, China, South Africa, are all here in New Delhi for the 4th annual BRICS summit. One of the major things on the agenda was talking about a potential BRICS basket currency that could serve as an alternative to the American dollar or the euro. Today, all the 5 leaders signed an agreement to actually give out loans in their local currencies, which is another move that they're thinking about moving away from the dollar.
Well, the BRICS aren't the only ones. According to the New York Post, some countries, such as Africa, are dropping the dollar for the Chinese yuan for cross-border transactions. In addition, the United Arab Emirates and Iran also agreed to make similar moves for oil trades with China. There are also growing concerns that Saudi Arabia might decide to accept other currencies for oil, which would further reduce the demand for US dollars and treasuries that I mentioned earlier. Finally, the United Nations and the International Monetary Fund have been pushing for a new global currency for some time now. In fact, moving away from the dollar is finding support for many international agencies. The UN said, quote, "The current system of currencies and capital rules that binds the world economy is not working properly and was largely responsible for the financial and economic crisis," and also said, "A new global reserve system could be created, one that no longer relies on the United States dollar as a single major reserve currency." So basically, countries and institutions around the world are losing confidence in the weakening dollar as our fiscal outlook worsens. Last year, PIMCO CEO Mohamed Al-Arian came on Bloomberg TV, and this is what he said.
It has been a weaker dollar. Mohammed, what does a weak dollar signal to you? What does a dollar signal that can't jump up here on a day like we've seen today and the weekend?
It's a warning shot to America that we cannot simply assume flight to quality, flight to safety, that people are starting to worry about the fiscal situation in the U.S. They're starting to worry about the level of debt. They're starting to worry about what they hear about states and municipalities. So I would take this as a warning shot that we cannot assume that we will maintain the standing of the reserve currency as we have in the past.
So what happens if it's declared that the US dollar is no longer the world reserve currency? First, let me explain. The value of our dollar is based on the role it plays in global trade. If that role vanishes, the dollar will depreciate as central banks around the world reduce its holdings. The effects of this could devastate our economy over time. First, servicing the federal debt could become extremely expensive as interest rates rise. Next, interest rates could then spike across the board, from credit cards to mortgages. Then, we could experience severe inflation in food, clothing, and energy. It's safe to say that the standard of living in the US would be reduced by at least 25% as a result of this. Finally, The Federal Reserve would find it difficult to print more money for the government because of hyperinflation risks. This could eventually lead to a debt crisis here similar to Europe's if markets lose faith in the US Treasury. Of course, a less government debt would mean fewer problems. Let me remind you that it wasn't too long ago when this happened.
Working the phone say a lot of their customers are freaked out waiting to see how low the Dow will go.
Worst day on Wall Street since the crash of 1987.
More Americans are out of work.
Inflation rising faster.
Motorists already feeling pain.
Working age Americans actively looking for a job.
We're in the last days of this country surviving.
I'm not here to scare you, but to inform you. Time will tell when this major shift occurs. The threat of the US dollar losing its status as a global currency is real, so I hope we plan for this, because this could drastically reshape the American way of life. If you want to read more about this, visit my website at moneyinsights.com, where you'll find links to the sources. And we'll leave it there for tonight. Thanks for watching. Until next time, take care.